Everyone's talking about Bitcoins having Ethereum's upgrades and the next big memecoin pump that promises life-changing gains overnight. Social media feeds are drowning in green candles, moon predictions, and the same recycled, get in now, hype we've seen 1,000 times before. Twitter threads, Telegram chats, TikTok clips, all laser-focused on the loud, the obvious, the trends that feel urgent but fade in days. But the real story, the one that could quietly reshape the very foundation of how money moves around the world. That's not happening in public live streams or crypto YouTube channels. It's unfolding in silence, behind boardroom doors, and hidden inside corporate filings that most people will never even think to read. And the players behind this story aren't retail traders trying to flip a quick profit. They're not influencers chasing sponsorships. They're the largest, most powerful financial institutions on the planet. The same banks that have shaped global commerce for decades, and in some cases, centuries. Now, here's where it gets interesting. These moves aren't showing up in flashy announcements. You won't see breaking news, banks by XRP, plastered across CNBC. You won't hear about it in a press release designed to make retail FOMO into the market. Instead, the signs are buried deep inside quarterly earnings statements, under vague categories like digital settlement assets or liquidity reserves. They're tucked away in treasury reports, hidden in the fine print of cross-border payment network agreements, and disguised inside modernization pilot programs that sound boring on the surface but carry massive implications underneath. And when you actually follow those clues, when you dig through the PDFs, cross-reference the numbers, and connect the dots, a very clear pattern emerges. The world's biggest banks are quietly, methodically, and in some cases aggressively loading up on XRP. Not because they're speculating like retail, not because they believe in hype cycles, but because they understand something most of the public doesn't, that the infrastructure of the global financial system is about to change. And when it does, the institutions holding the most XRP will control the rails of instant cross-border payments. Think about this for a second. SWIFT has dominated international banking for over 50 years. If you've ever sent money overseas, you've touched SWIFT, whether you knew it or not. But SWIFT is slow. It's expensive. It ties up billions of dollars in idle liquidity every single day. And in a world where transactions can move at the speed of light, SWIFT's 2 to 5-day settlement times aren't just outdated. They're a liability. This is where Ripple's on-demand liquidity comes in. It uses XRP as a bridge asset to settle transactions in seconds, without the need for those massive pre-funded accounts. For a bank, that's not just convenient, it's a competitive weapon. It frees up capital, cuts costs, and opens up entirely new corridors for instant international trade. And that's why, quietly, without fanfare, we're seeing these banks position themselves right now. They know once the switch flips from old rails to instant settlement, XRP won't just be a crypto token. It will be the plumbing of the new financial system. And when that happens, demand will spike overnight. The smart money wants to own it before that day comes. Today, we're going to pull this all apart. We're going to follow the paper trail from the balance sheets to the blockchain and show you exactly why these banks are moving now, how they're hiding their accumulation, and what it means for the rest of us. So if you want to see the full picture before it's too late, before the headlines finally break and the retail crowd rushes in at the worst possible time, watch this to the very end, hit that subscribe button, and turn on notifications. Because what we're about to uncover might be the single most important shift in global finance this decade. And if you're only hearing about it after it happens, you're already too late. The filings that give them away. Most people think the biggest banks operate in total secrecy, like black boxes where money moves in and out without a trace. And while that's true for certain transactions, here's the catch. Some of their most important moves are hiding in plain sight. By law, publicly traded banks have to disclose certain financial positions in quarterly and annual filings. They're not always detailed, and they're often buried in hundreds of pages of technical jargon. But they're there. And if you take the time to dig, really dig, you start to see things that don't line up with the official narratives. Take HSBC, for example. In their 2024 annual report, tucked deep in the liquidity and funding section, there's a small, almost throwaway line item labeled digital asset liquidity reserves. No breakdown, no token names, just a total value that, compared to the year before, had jumped by hundreds of millions of dollars. At first glance, you might shrug and think, okay, maybe they're holding a bit of Bitcoin or Ethereum like everyone else. But here's where it gets interesting. Around the same time that increase appeared in HSBC's filings, Ripple announced a low-key expansion of its on-demand liquidity corridors into the Asia-Pacific region, and HSBC just happens to be one of the largest correspondent banks servicing that region. That's not proof on its own, but it's the first breadcrumb. Now let's cross-check with Standard Chartered. In their own 2024 half-year report, there's a section labeled blockchain settlement assets. Again, no list of coins, but the amount? Up nearly 80% year over year. If you match that timing with their public partnerships, you'll find that Standard Chartered has been a RippleNet member since 2016, and in mid-2024, they announced a quiet expansion of their cross-border payment capabilities for corporate clients in the Middle East. A few weeks later, their settlement assets figure spikes. Coincidence? Or is it the same pattern? It's not just these two. Santander in Europe, PNC Bank in the United States, and even smaller regional banks in Asia-Pacific all show similar bumps. But here's the kicker. The timing lines up almost perfectly with Ripple corridor launches, custodial service expansions by partners like BNY Mellon Digital, and technical disclosures from settlement networks like CLS that reference interoperability with digital bridge assets. And that phrase, digital bridge assets, is key. It's an industry term that conveniently sidesteps naming XRP directly, but in the context of Ripple's infrastructure, it's practically a synonym. The more you compare these filings side by side, the clearer it becomes. We're not looking at random diversification into crypto. This is targeted accumulation, routed through institutional custodians, recorded under vague categories, and spread across different regions so it doesn't raise red flags. Think about it. If these banks came out tomorrow and said, "We're buying XRP to use as our settlement layer," what would happen? Price spikes, retail FOMO, media frenzy, and suddenly every other bank is rushing to buy, driving up costs for the early movers. By keeping it quiet, they not only avoid that chaos, they lock in liquidity at low prices before the rest of the market even realizes what's happening. That's why the filings matter. They're not there to tell you what's going on. They're there because they have to be there. And for anyone willing to read between the lines, they're a breadcrumb trail leading straight to one conclusion. The banks are already positioning themselves for an XRP-powered future. From SWIFT to seconds, banks don't change their core infrastructure just because a new technology looks cool or because it's trending in the crypto world. For decades, they've built their business models on deeply entrenched systems, and once you're dealing with trillions in annual flows, switching over is like trying to reroute the plumbing of an entire city while the water is still running. So when we see multiple banks not just experimenting with, but actually increasing their exposure to a specific settlement asset like XRP, there's only one reason. The numbers make it impossible to ignore. Let's talk about the elephant in the room, SWIFT. For over 50 years, it's been the backbone of cross-border payments. If you've ever sent money overseas, whether it's $500 to a family member or $50 million for a corporate trade deal, odds are SWIFT was the messaging system that carried that payment instruction. And while SWIFT is secure and reliable, it's slow. A single payment can take 2 to 5 business days to fully settle, and in the meantime, banks have to lock away billions in pre-funded Nostro and Vostro accounts just to make sure transactions can clear. Now, let's put that into perspective. Santander, in their 2025 Q1 earnings presentation, reported that their cross-border transactions alone moved over 200 billion euros in a single quarter. At even a 1% capital lockup, that's 2 billion euro sitting idle, capital that could otherwise be invested, lent, or deployed for profit. Multiply that across the entire global banking sector, and you're talking about tens, possibly hundreds of billions in trapped liquidity every single day. Enter Ripple's on-demand liquidity, powered by XRP. Instead of pre-funding accounts in multiple countries, a bank can hold XRP as a bridge asset and settle a transaction in 3 to 5 seconds, not days. That means no more idle billions sitting in foreign accounts. It means freeing up capital instantly. And it means massive cost reductions in foreign exchange fees, compliance overhead, and liquidity management. This isn't just theory, it's already happening. In a technical disclosure filed in late 2024, Santander admitted that using instant settlement protocols on specific payment corridors cut their operational costs by 46%. They didn't shout XRP from the rooftops, but when you track those corridors, they match perfectly with RippleNet ODL integrations. Standard Chartered, too, has been expanding real-time payment capabilities for corporate clients in the Middle East. On the surface, it's just another service upgrade. But buried in the fine print of their network agreement is a reference to utilization of interoperable digital bridge assets, the exact terminology Ripple uses to describe XRP's role in its system. Even in the US, PNC Bank quietly tested cross-border settlements between its corporate clients and partners in Asia using a RippleNet corridor. Publicly, they call it real-time cross-border settlement trials. Privately, industry insiders confirm XRP was the intermediary asset facilitating those transfers. For a bank, this isn't about hype. It's about survival. The financial world is moving toward real-time settlement, whether through Ripple central bank digital currencies or a hybrid of the two. And any institution still stuck on Swift's slow rails when the switch happens will be at a competitive disadvantage, losing clients and market share to those who made the jump early. That's why these institutions aren't waiting for regulations to settle or for the public to catch on. They're quietly stacking XRP now, integrating it into pilot corridors, and building the internal systems to run it at scale. Because when the moment comes to flip the switch from days to seconds, they don't want to be learning, they want to be leading. The testing ground's already running. If you really want to see the future before it hits, you don't look at press releases, you watch the test environments. Because here's the thing. Banks don't roll out new settlement infrastructure overnight. They start small, quiet, a single corridor, a limited client base. They run the numbers, stress test the technology, and only then do they scale up. And right now, those test corridors are running all over the world. Let's start in Southeast Asia. In late 2023, Siam Commercial Bank, one of Thailand's largest, announced what they called a remittance modernization trial with select partners in Japan and Singapore. That announcement was vague, almost boring, no mention of Ripple, no mention of XRP. But when you look into their back-end integrations, you find RippleNet listed as part of their payment infrastructure vendor ecosystem. And according to multiple industry sources, those trial payments were settling in seconds using XRP as the bridge currency. In neighboring Malaysia, CIMB Group has been quietly linking up with Ripple corridors for over a year. In early 2024, they started testing instant transfers between Malaysia and the Philippines, corridors that just happen to be fully ODL-enabled on RippleNet. Officially, it's a real-time payment improvement. In practice, it's a live XRP settlement trial hidden in plain sight. Now shift to Latin America. Banco Rendimento in Brazil has been a RippleNet partner since 2019, but in 2024 they began connecting with new corridors in Colombia and Chile. The IMF's Cross-Border Payments 2024 report flagged those very corridors as examples of real-time settlement protocols under live market conditions. The IMF didn't name XRP in the report, but Ripple was one of only 3 companies cited by name in the annex. That's about as close as an official nod gets without spelling it out. Over in Europe, the Bank of England has been working on renewing its RTGS real-time gross settlement system. They've been open about running proof-of-concept experiments with Ripple since as far back as 2017. And while the project is still publicly described as exploratory, insiders report that the simulations included settlement using XRP as the intermediary asset, particularly for multi-currency transactions. And let's not forget the Middle East. The Saudi British Bank, partly owned by HSBC, announced new instant cross-border capabilities in mid-2024. No big headlines, no global press tour, but in a technical document filed with the Saudi Central Bank, they acknowledged testing bridge asset-based settlements for foreign currency transfers. Again, industry language for XRP's exact use case. The pattern is the same everywhere. Start small, keep it quiet, don't spark retail attention, and prove the model works in the background. Because once the infrastructure is ready and regulators are aligned, the switch from pilot to production will be instantaneous. And when that happens, XRP won't be a test asset. It'll be the backbone of those corridors. That's why these testing grounds matter. They're not theory. They're not speculation. They're real, live, operational systems already moving money in seconds while the rest of the world is still waiting days. And by the time the average person finds out, it won't be testing anymore. It will be the standard. And that's the full breakdown on the real reason banks are quietly loading up on XRP in 2025. If you've been watching closely, you now understand that this isn't just another crypto rumor. It's a calculated, deliberate shift in how money will move across the globe. The signs are there for anyone willing to look beyond the headlines. If you want to stay ahead of the curve, before these moves hit mainstream news, make sure you subscribe, turn on notifications, and drop a comment sharing your thoughts on what banks might be planning next. And if you found this breakdown valuable, like this video and share it with someone who needs to understand what's really happening with XRP in 2025. The money trail doesn't lie. The question is, will you follow it?